It is, yeah, it's March 2024 now. So, time for the new Bitcoin monthly forecast. If you know anything about Bitcoin, you'll know that monthly forecasts are just a big picture kind of view of things, as they are really with any kind of asset. Right? If you're a trader, and I mean a real trader, then you probably ought to be trading low time frames. Right? And if you trade the VEPs, so you trade low time frame volatility. And if you look at the big picture, just to get a sense of where things are going, you're better suited to understand how the lower time frames, weekly, daily, 2-hour, 4-hour, 90-minute, 1 hour, and so on, all the way down to the 1 minute, and possibly below if you happen to have such fast fingers, are affecting the higher time frames. So, if you look at the new monthly ranges on the VRE, you'll notice that the VRE this month has a very wide range of about 10.25%. So that is a range of, and you'll notice that the monthly range is down below the weekly is obviously still super tight, 0.04%, which is below the new monthly range, and the monthly range is below the daily range. The daily range is relatively tight. It's like 0.8% or something like that. So it's a relatively tight range, which means it's a trending day and it's a trending week. So you have a trending day and a trending week on a new ranging month. What does that mean? Well, that means that for today, on a short-term aspect, given the volatility and everything else, there is a good bit of indication showing during the day the price will go up, and so far it has done just that. And that by the end of the day, it may be flat or even a little down. If you look at like the longer lengths of the volatility and correlation. However, for now, variance is falling down correlated, so price go up, and again, so far it has on the day. That's for today. And at the moment, on the 4-hour, the asset is in mean reversion to the 1110 RMLR. What does that mean? Well, the 1110 RMLR is above the asset at the moment. It is likely to complete that mean reversion before touching the third standard deviation band to the downside of the 1110 RMLR, which it hit several candles ago, and then stopped hitting it. Once it stopped hitting for a couple candles, it was very likely confirmed to be in mean reversion. Came off close to hitting it again on the last candle, but did not, and it seemed as though it was poised to pull a very rare touch again of that band on the current candle. However, it did not. At least it didn't when I last looked at the chart. And so far, it remains above it and seems to be continuing as normal in mean reversion to the RMLR above. It means that it would not be surprising, even though the asset is also to the 3012 RMLR below, around here, it is 3012 RMLR on the daily time frame. So the 4-hour time frame is actually giving an occurrence of opportunity, which seems likely to see price action rise to that RMLR for the time being. It may not, but it certainly looks as though it's poised to do so over the coming candles. Could be any time today or maybe tomorrow that it might do that. At which point after that RMLR may begin to drop back down, and if the price action doesn't rise significantly until then it could very well kind of have a sideways walk to mean reversion completion. It's entirely possible we see that. It's also possible that it will do something similar. However, typically we do see the mean reversions complete normally, and so I wouldn't be surprised to see that. So which means on the day I wouldn't be surprised to see price action actually possibly bump up even more than what they're doing at the moment. Quite possibly coming close to 4, even 65K, which I know sounds quite high. However, it's not that high for price action currently, and would not all be out of the ordinary if it happened. On the daily, like I said, the asset is in mean reversion at 3012 RMLR and below, down around 50K. But the power mean is also rising along with it. I know it's just an intersect on the RMLR and the 30 power mean, and that means that there will be very likely another relatively nice move relative to the time frame on the daily time frame within 0 to 4 candles. So today is Friday, so Friday, Saturday, Sunday, Monday, Tuesday. By Tuesday, it would be highly probable to see some kind of relatively nice move on that asset. I would not at all be surprised to see that. In fact, I wouldn't be surprised to see the price pump a little today and or tomorrow, or maybe pump today, drop tomorrow, and pump again on Sunday, only to go sideways or drop on Monday and or on Tuesday. None of that would be surprising, given the way that the asset is moving and the RMLRs are positioned around the asset. All of that would be falling right in line with the probabilities. On the broader outlook of the weekly, we still have the weekly rising well above, maintaining itself well above the power mean as well as RMLRs in question. And on the monthly, you have also the asset once again rising above the power mean, and positive returns beget positive returns until they don't, which means for now the asset is good for long in the high picture. However, of course, as traders, like I said, we look at the low time frames because that's where the changes happen, that's where the action happens, that's where the trades happen. And so all in all, looking good for Bitcoin in terms of having lots of currencies of opportunity this month. If you look out towards the end of the month on like the daily forecast, etc., it does look like we are going to have various intersections this month, as expected, about a month before Bitcoin halving, and that is going to lead to some very opportune trades, occurrences of opportunity for the smart money who know about the halving, who have it priced in, who figured out where their buys and sells are already ahead of time, and who know where they want to be putting their money, their risk, before the halving, at the halving, and after the halving. and then after the initial reaction to the halving as well. All in all, the next couple of months, few months even, March, April, May, are positively looking brilliant for scalps and for low time frame trades. And as far as bag holders go, well, bag holders for the long term are in a good position, it seems. And one funny traditional market confirmation of this is the useful fool, Jim Cramer, who yesterday posted Bitcoin will never see an ATH again, being an all-time high, which is a laughable comment, but he is a clown. He's paid to be a ridiculous comment maker by his bosses at NBC, CNBC, whatever, which is basically owned by GE. Right? So their agenda is always the driving force of his show. Whatever they want him to say, he says. And so, I mean, that's certainly not any kind of technical analysis or any kind of analysis to take to heart, especially if you consider how often he's provably wrong. And yes, you could use something silly like the counter trading index of Jim Cramer or whatever. Basically, whatever he says, do the opposite, and you're going to win most of his trades. Of course, it's not a reliable indicator in the sense of it's not quantifiable in a measurable sense, because he can say whatever he wants. Randomness, right? And look, once in a while he'll say the thing that is correct. Why? Well, because of his agenda. Right? So sometimes, as the old expression goes, even a broken clock is right twice a day. Unless it's a digital clock and the batteries are out, or unless somebody takes the hands out of the analog clock. In any case, it's certainly worth keeping in mind that the nonsense he says is literally that. It is nonsense. You should really pay no mind to it at all. But just keep in mind the latest foolish comment he made, because even though he won't eat crow in a sense, because he doesn't care what he says, he has no remorse for his silly nonsense, since that's his job to say that silly nonsense. But it is extremely probable that Bitcoin will in fact see another ATH bring up. The Fed has an interest in doing that. One of the reasons is that the powers that be simply do not want you and me to have any Bitcoin or to have any significant amount, because they would rather that you stick in the world with fiat, which is completely garbage, and they know that the jig is up, but they're trying to cling to power as much as they can and not burn the house down, so to speak, until they have as much of the new monetary asset as possible. Right? It's in their interest to keep you scared away from it as long as possible, until they own as much as they possibly can, and you own as little as you possibly can, so that when the time comes, you have no choice but to buy in at extremely high prices, for tiny little amounts of satoshis, equivalent to what the dollar will be or something similar, and switch your life over to crypto. And if you think that you won't ever switch your life over to crypto and the fiat will be around forever, I have some news for you. That is a ridiculous position to think. You can't be blamed for it, because maybe you just don't know. But every fiat is designed to fail. They have all failed throughout history. Only the longest lasting one is the GBP, and even that is cracking and will eventually fail. And the USD is of course to crash and burn, like all the others ever have, as is the euro, the pound, the yen, whatever. Doesn't matter. They're all designed to fail, because they have less and less purchasing power every time their central banks or Federal Reserves print new amounts of their currency without any underlying asset tied to it. So they just have an infinite puncher, and it's all about perception. It's not real money. And on that note, keep in mind the monthly forecast of Bitcoin is looking good for low time frame trades. All right, on that note, happy trading.